Did you know that nearly 80% of business owners who lease cars think they're maximizing their tax deductions, yet many leave money on the table or misapply the rules entirely? The truth is, leasing can be a powerful tax saving tool, but only if you understand how it really works. So is leasing a car the ultimate tax hack, or is it just a flashy misconception? Let's dig in. Welcome back to the channel. If you're new here, I'm your host, Jonathan Wood, and I help business owners and real estate investors master the art of tax strategies. Today, we're talking about something that confuses many: car leasing and tax write-offs. Here's the deal. Leasing a car for business use can sound like a no-brainer: lower payments, fewer maintenance worries, and of course, potential tax savings. But the IRS doesn't make it as easy as just deducting your monthly lease payment. In this video, we'll cover everything you need to know, starting with how car leasing works in just a tax context, what qualifies as write-offs and what doesn't, common traps to avoid when leasing your car to your business, and whether leasing or buying makes more sense to you. So grab a notepad, because this might change how you approach your vehicle's next purchase. Let's start with some background. Leasing a car means you're essentially renting it for a set period of time, usually 2 or 4 years. Instead of owning a car, you pay for its depreciation during your lease term, plus fees and interest. For businesses, this can be appealing just because the upfront costs are lower than buying. You can potentially deduct a portion of the lease payments, and you can regularly upgrade to newer models without the hassle of selling or trading in a new vehicle. But here's where it gets complicated. The IRS doesn't let you deduct the entire payment. Instead, you can only deduct the portion of the lease payment that corresponds to your business use. For example, if you use your lease car 70% for business and 30% for personal errands, you only get to deduct 70% of your lease payment. Many people assume leasing is automatically better than buying for taxes, but that's not always the case. Misconceptions like this are why understanding the rules is crucial. Now let's break down the tax implications of leasing a car. Number one starts with what qualifies as a write-off. To claim a tax deduction for leased cars, you need to meet the specific criteria. The car must be used for business purposes. This includes driving to clients' meetings, making deliveries, or other work-related travel. You need to keep a detailed record of your mileage and the purpose of each trip. Apps like Mile IQ can help with you track these very easily. Also, number two is how lease payments work as deductions. Your lease payments are partially deductible based on your business use percentage. For example, if your monthly lease payment is $500 and you use the car 80% for business, you can deduct $400 each month. Number three is luxury car limits. Here's where it gets tricky. If you lease a luxury car, the IRS imposes limits on how much you can deduct. For example, if you lease a high-end SUV for $1,000 a month, you may only be able to deduct a portion of that due to the IRS's luxury auto rules. Number four is other costs you can deduct. In addition to lease payments, you can typically deduct fuel costs, maintenance and repairs. You also can deduct insurance premiums, and as well as registration fees. But again, these expenses must align with your business use percentage. Here's how we was able to save a client $40,000 in taxes by implementing this one strategy. We started with implementing professional bookkeeping for her business. This allowed us to track her monthly performance and uncover some opportunities to lower her tax bill. You can't save what you can't see. This is what it's like working with a tax strategist. Click the link below to schedule your free discovery call today and see how we can do the same for you. Let's dive into the pros and cons of leasing a car as a tax strategy. So here are some of the advantages of leasing a car to your business. Lower initial costs compared to buying. Leasing requires less cash up front, which can help preserve your business's cash flow. You also have tax deductions. If used properly, leasing can provide consistent, predictable deductions over the term of the lease. You also will have flexibility. You're not tied to the car in the long term, making it easier to upgrade to newer models. Now, here are some of the disadvantages of leasing. Mileage caps. So most leases come with a mileage limit, usually around 10,000 to 15,000 miles per year. If you exceed these limits, you'll face hefty penalties with that. You also have lack of equity. Unlike buying, you don't build equity in the car, so once the lease ends, you don't own anything. You also have luxury car restrictions. If you're leasing a high-end vehicle, the IRS caps your deductible amount for the entire year. Ultimately, leasing is the most beneficial for those who need a reliable vehicle for moderate business use and value the flexibility of upgrading every few years. To give you more context, leasing is an excellent option for some business owners, but only if they track their usage and consider the long-term costs. I spoke with Sarah, a freelance consultant who leased a car and saved over $3,000 in taxes last year. Her secret: I kept meticulous mileage logs and worked closely with my tax advisor to ensure I was deducting everything I was eligible for. Hearing real-world examples like these can help you see how leasing might or might not fit into your own tax strategy. So what's the verdict? Leasing a car for business purposes can absolutely be a tax smart move, but it's not a universal solution. The key is understanding the rules, tracking your usage, and running the numbers. In some cases, buying a car outright or financing might make more sense, especially if you drive a lot or want to avoid mileage caps. If you are considering leasing a car, take the time to evaluate your business needs and consult with a tax professional. The right strategy can save you thousands, but the wrong one could cost you more than what you bargained for. Now, I want to hear from you. Have you leased a car for your business? Did it work out as a tax deduction? Or were there some unexpected surprises? Share your experiences in the comment section below. I'd love to start a conversation. And also, if you found this video very helpful, give it a thumbs up and subscribe for more actionable tax tips and strategies. And if you're ready to take your tax game to the next level, check out my other videos on how to maximize your deductions and build wealth through smart tax planning. Thanks for watching, and I'll see you in the next one.